Hey traders, welcome to the Top Tier Outlook. It's Sunday evening, 6 p.m. Eastern, and we're getting the very first look at what's going on with the open. So every Friday around 5 p.m. we get the wind down of the futures. Actually, at 4 o'clock Wall Street closes and futures trade a little bit longer. But this is the first look we get each and every week, whether you're trading Forex, futures, what have you. This is that first look at the Asian session. Now, on Friday, there was a couple things we were looking at pretty darn closely. As you can see here, we had a little bit of weakness on the close. And the idea was, if we have weakness, there's an old saying, don't fade Fridays. And I don't want to buy into weakness on a Friday because there's a chance that either on the Sunday Asian Open or as we go into Europe and then finally into the US, are we going to see a little bit of that follow through? But that's not always the case. The bottom line is we have been hugging the daily price movement range both on Thursday and on Friday. So that support level has been doing a pretty admirable job of holding. Friday also kicked off earnings season. So JP Morgan, Citi, Wells reported. And this is especially important for traders who are starting to look at the Dow, playing catch up a little bit more, and the S&P, maybe for the first time in a while, starting to rally on reasons other than just coattailing what's happening in the NASDAQ. So if we start to get broader participation, so let's talk about the two shuns, participation and rotation. We don't have to see profit taking in one sector to see strength in another, because there's always the possibility that dollars just come off the sidelines and that there's broader participation. And as a lot of traders had mentioned, gosh, Rog, this has really been a rally for the most part this year based on a very small number of stocks, a very small number of names that are heavily weighted in the indices have been what's carrying everything higher. And that's okay. That's just how the markets are built now. No one seems to want to necessarily, I shouldn't say no one, that's a little too broad, but very few traders want to acknowledge that it doesn't take much for the equity markets to go up or go down. And this is not only the indices, NASDAQ, S&P, but also those heavily weighted sectors. Probably a really great example of this is how Lilly almost single-handedly has been keeping the healthcare sector fairly strong. This is what happens when the number one weighted stock is able to have as much influence over a sector as it has. There are three stocks in healthcare that have been pretty strong: Lilly, AbbVie, and ISRG. But, really, as long as Lilly stays strong, we're going to continue to rally. And the same can be said for the likes of XLK influencing the S&P and the NASDAQ. Now, if the financials can start to participate, one of the things that I'm looking at in the Top Tier Outlook newsletter here today as I'm writing it is, what are the chances that we can get above $42.50, a high that we hit back on May 17? What are the chances we can get above that and continue to climb? Well, we have another four or six financials, heavily weighted financials earnings coming out this week. So as we get that data, we'll see if the financials, which have been, pretty strong since they've been surging the beginning part of this month, if they can continue. Keep an eye on the Dow. Another corner that we're actually in right now in the Sector Secrets Mastery is crude oil. We're long crude. We set this position up into the close on Friday. Yes, crude oil futures are one way to do it. The micro futures are another way to do it, as are the USO ETF options when they are liquid enough. Sometimes they have a nasty little habit of being a little too illiquid, but this was not the case for the 80 strike that we bought last week. So we're looking for that pullback into the support zone of that gray area, which is a volatility-based support. And then we're looking for a resumption of what has been since July 8th, an overall uptrend. All right, so that's what we've got there. The other thing that I want to keep an eye on is what's going on in, here we go, transports and industrials. Now, transports and industrials aren't as influential over the Dow as Dow Industrial Average would make it seem. The Dow Industrial Average is, in fact, actually a financials and tech heavily weighted index, but we've seen a pretty big surge in IYT and in XLI, and there's one stock that they share in both, and that is Uber. Uber's been en fuego, and who knew, but this is a heavily top 3 weighted name in both those sectors. Who knew Uber is considered to be an industrial and a transport, and yet there it is. So when we take a look at what's going on for IYT, we'll keep a cautious eye on GE, but I don't think it's quite ready for prime time. We'll also keep a cautious eye on CAT. CAT had a number of up days after being really heavy for the better part of end of May to the beginning of July. So I'm going to be cautious there. The best follow through is likely going to be in places like Uber, where the trend is there. And another name that we've been watching pretty closely, Honeywell. So these are unusual names to have on a watch list usually, but these are names that we've continued to keep an eye on in Sector Secrets Mastery. So it's not about trading our favorite names. It's not about trading the names everyone else is talking about or focused on, but it's finding the structure that has the best chance for follow through, right? I don't pick favorites. Well, maybe I do. If it's trending and the option chain is liquid, yeah, I guess it quickly becomes my favorite. So find those trends, engage those trends, and that's going to be the best way to take advantage of those moves. All right. Next up, let's go take a peek at what's going on with copper and gold. Why these two metals? If you take a look at the month-to-date performance from a sector perspective, copper and gold would be the main drivers of the GDX ETF and XME. And GDX has been pretty darn strong in terms of the overall movement higher. And some of that we could credit to what's going on with gold. And copper, which had a really tough June, I mean, it was really weak through June, has finally broken the downtrend and starting to see a little bit more support. And you'll see that names like XME, even Freeport McMoRan are able to sort of shake off those as you can see, shake off those shorts, and they're starting to move higher. So we definitely want to keep an eye on these going forward. Another sector you'll find in the top 5 is utilities. Utilities had a really strong end to the week, and the downtrend that had formed late in May has now been broken as of Friday's session. I don't think it's quite an uptrend yet, but it's certainly no longer a downtrend. And so we have really what could be considered maybe bearish chop. A little too soon to tell how anxious I will be to buy XLU, but I do like overall the way it's moving. So Joe, yeah, in terms of XLU, a great question. If I'm looking at XLU, it's really an NEE narrative first, because this is the heaviest weighted stock in the XLU. And then once the XLU is really no longer just an NEE story, we know we're going to see a little bit more participation in things like Duke, Southern, and you can see Duke is definitely starting to move. Just because something's moving higher doesn't necessarily make it an uptrend. I'd be cautious here, because here's the thing. Utilities are appealing when NASDAQ tech stocks that we would expect to have a higher return, aren't performing. So folks say, well, let's just take a little cover, and we'll do that in staples, or we might do that in utilities. So, we've got in the Sector Secrets Mastery long positions like Colgate. I know, who trades Colgate? We do, right? It's a great place to have an uptrend. That was when it pulled back to a mean reversion. We've gotten a great bounce at it. We've scaled out of it now twice. So I love places that are, going to at least give us an alternative to just being in tech, and more tech. So I love where you're looking, Joe. So XLU, NEE, I would make sure that the structure is good there. And then absolutely, we can look at the relative outperformers. I'm just going to look at my other screen here at the multi-chart layout of the utilities. And what you'll see here, well, actually you can't see it, but I'll let you know. The names that are pretty bullish at the moment, CEG, to your point, Joe, bullish, Momentum, SRE, AEP, DUK, and Southern, SO. So those would be the 5 names that are at least bullish momentum, even though everything else is basically a neutral trend. So definitely worth keeping an eye on there. Good stuff. All right. And by the way, the same thing could be done of XLP. So if you're wondering, Rog, all right, if I'm looking for something a little bit more defensive, I don't want to just go into tech and financials is a little too soon. I don't want to be just piling into semis, things like that. What else can I look at? And the other thing would be stocks weighted within the XLP. Your best two continue to be Costco and Walmart. Those would be your best two. Keep an eye on Philip Morris. It had a momentum breakout through about 105 on Friday. We mentioned before, Colgate was in an uptrend when we bought the dip, and even though it's no longer trending, what was bullish tends to still carry that energy with it, and so Colgate continues to follow through. But I'd keep an eye on this one. PM having taken out 105. Let's see if we can organize into an uptrend. And like I said, we're in that CL trade. Keep an eye though on Walmart and Costco. I know Costco is not always something traders like to trade because it is a pricier name. It's a spendier option. But if we're just talking about some of these defensive names, yeah, I'd definitely keep an eye on Walmart as well. I mean, that is getting tantalizingly close to more opportunities to buy in that volatility-based support level. All right, let's circle back to what we've got going on in the indices. About 11 minutes into that very fresh open. So nothing really here that's suggesting any kind of weakness at the moment, even though we're down. Remember, we're above the previous session close. So I'll see where we are in relation to 56.67 on the ES come 7 a.m. Eastern, of course, into the bell. And you can see here, NAS is down just a smidge. So again, we're kind of lingering around the previous session close, which just tells us whatever the mood was into Friday's close is not that different going into the open. And so again, what I'll look to do is see what at 7 a.m. pre-market, the look on the S&P NAS, Dow, Russell R. And then of course, we'll go into the bell at 9:30. All right, XLRE. As far as it launched itself higher on Friday. I'll leave this alone until I get a pullback. So Dave, yeah, it took off, which is great. It had been moving in a sideways chop for a while. If you haven't watched me go through what to do with a sideways chop as we're anticipating a follow through, look, as long as we're trading above the 200, which we have been since the end of May, I would look for a breakout to the upside. But I don't want to wait for the breakout. Right? I don't want to chase it after it's made a significant move. So there are ways to use the Darvas levels and to use the zones and just say, if we're in this particular section of the zone, how can we position ourselves for follow through? And that's pretty much what XLRE has done. So either we come back down and test this 39 area, or even better, maybe the VWAP around 38.20, but I won't be buying it up here. But certainly this is a great example of when you have a sideways market and the directional bias is up, how do you position yourself on some kind of retracement into the range to not only give yourself an opportunity to scale out if we get stuck at the top of the range again, but also give yourself a chance to take advantage of the breakout in case that's what happens. And obviously the latter happened here. All right, next up is REAL. Trying to go neutral, shook off the downtrend. Might be a little too early for buys, but it's no longer a downtrend on the REAL. So if you were looking for a way to take advantage of it's been going down, but I think it's going to start moving up on something that's $3. Fuzzy, keep an eye on volume. Yeah, I would say if you're going to look at something like that, keep an eye on. Hang on one sec. There we go. Keep an eye on volume because anytime you have a stock that's in that price vicinity, it's really not price that's going to be moving it. It's not the fact that it went through 350 or 320. You want to keep an eye on the point of control, say for the previous quarter or for the year. Where are the volume ledges? I would highly recommend keeping an eye on volume when you're playing anything under 20 bucks for that matter. All right, Intel. As far as Intel goes, here we go. SMH The strongest names in SMH continue to be, and sorry, I'm just looking over at another one of my screens here. The strongest names in SMH continue to be TSM, AMAT, LRCX, and yes, Intel. So if we're going to start to take advantage of a very fresh uptrend, so Intel confirmed the uptrend upon closing on the 11th of July. So now that we have a little bit more confirmation of a very fresh uptrend, yeah, I would focus on the pullbacks, Alan, to the gray zone, for long positions. Absolutely. Absolutely. All right. So next up is MO. So PM is part of that same group within the XLP as MO, but MO hasn't really been grabbing my attention in terms of, it's not bearish, don't get me wrong. And PM and MO really haven't been grabbing my attention all that much, but they're the same setup. So I'd love for these to turn into trends. ESP, I would love for these to turn into trends. Something a la what Colgate had done, what Walmart and Costco are doing, but having broken through that resistance level on both of them, look, they almost look identical, right? PM and MO in terms of what they've done. If we can get that pullback back into the range, that might be something to consider. But really, that would be a trade that's the second leg of what a setup like this is, which is find the sideways range, find the zones within the range that you can buy from, consider moving to a break even or scaling out at the top of the range. And then the second phase, if you will, of the trade is, do we get the breakout? And that's where that second part of the trade kicks in, where you've already built in a trade from much lower. Maybe you've moved to break even or scaled out from the top of the range. And now if we can escape, right, the range, then that kind of second push, right, can be the next leg of follow through. All right. Next up is SMCI. SMCI had a great run earlier this year. When I look at it now, it's really not doing a whole heck of a lot. So, folks who grabbed SMCI earlier in the year, fantastic. But notice what it's doing now, a whole lot of nothing. This would be one of those symbols that I would use, that sideways range approach I talk about, which is have an automatic way, have an automated way of recognizing what the range is. I'm just looking at another screen here. Okay. So have an automatic way of recognizing where the range is, then find at what level. It could be the lower half of the range, it could be the lower quarter of the range that you would want to buy the calls. I mean, the bottom of the range at Darvis itself. And this is a modified Darvis, PJ, but I like to give credit, or at least pay homage to those folks who inspired what the indicator ultimately is. This is not a strict Darvis box, but it certainly was influenced by what I read early in my career about Darvis. So we call it Darvis 2.0 as an homage. So so I'll be using that Darvis. And then where is the zone that would make sense? To me, as close as I could get to, say, 800 to even 775, that'd be a great level that gives me the opportunity to either scale out at 900 or even 1,000. And then if we break out above 1,000, great. But if we don't, I position myself in such a way that I'm not sitting around waiting for the momentum breakout, or even worse, buying on a momentum breakout. I'm buying at a level where the risk reward is so much better, and acknowledges that we can move sideways for a really, really long time. All right. We got just a minute left. Gang, get those questions in early because we wrap up the show at 20 after. So last question is AVGO. AVGO, let's see here. So we're going to have all the craziness of the split. So PJ, I'll leave this alone for now, or I'll just trade it on a 1 hour, but we're going to have all the craziness of the split. Now look, if AVGO was heading higher before the split, not in an NVIDIA kind of way, but generally speaking, would I remain bullish on AVGO? Remember that it's not uncommon to see about a 5 to even 7% pullback. 10 is usually upper end on the split. But I'll leave AVGO alone for at least a couple of sessions, and then we'll see what is looking good within the SMH. But I'll tell you, as far as semiconductors go, AVGO wasn't really near the top of the list, not since it had a mean reversion, and that was some time back. So I would focus on ASML, TSM, AMAT, Intel, LRCX. Those have trends at the moment. and I'll just kind of let the post-split dust settle and then go from there. All right, gang. Thank you as always for being here for Top Tier Outlook. We're here every Sunday from 6 to 6:20 p.m. Get those questions in early. Tomorrow I'll see you for Charts and Coffee. Enjoy the rest of your day. Enjoy some good dinner. And then tomorrow we'll start it up all over again. Be good to each other, gang. I'll talk with you soon.